This is one of the most ironic journeys I've ever been on, but full circle, here we are at the end of it all, and what do we see? We see full circle DFV. Now, what do I mean by that? I'm going to walk you through the story between 2019 and today. Now, let's take a look and pay attention because this is backed by evidence. Let's go ahead and take a look. I'm going to link everything that I'm talking about here in the description, so if you want to look at this yourself, you're more than welcome to do that. But let's take a look. What do we have here? We have 9/17/2020, the day that the Fed stepped in as the lender of last resort, through 12/5/2022, which is going to be the compliance date for the CFTC swaps. So we're measuring that time frame. This right here is when the Fed stepped in as the lender of last resort, followed by SLR, followed by the three red lines that no one wants to read, followed by Archegos collapse, followed by SLR expiring, which also led to the repo demand skyrocketing, which then led to the three red lines relaxing, which just happened on the 28th. And then we have the CFTC swaps compliance date later this year, amongst other things like T0 and Layer 2 Ethereum. So, where do we go from here? Well, this is the MCHI. This is the ETF from iShares. Now, if you remember, BlackRock is actually the lending arm for the Fed to help out, because BlackRock's done that in every financial crisis since 2008 or earlier. They're basically helping with that aspect of things. So take a look at this. Repo starts right here. Go back to here. What do you see? One goes up, one goes down. I'm going to walk you through what happened. Let's take a look. So as soon as the Fed stepped in on September 17th, 2019, not only did he step in, the Fed, but they created several facilities and programs, all kinds of things to help prepare for the COVID-19 pandemic. Amongst those things, I'm just going to blow through these. Municipal liquidity facility, which basically helps state and local governments better manage cash flow pressures in order to continue to serve households and businesses in their communities. Main Street Lending Program to help support lending to small and medium-sized businesses and nonprofit organizations that were in sound financial condition before the onset of the COVID-19 pandemic. The Commercial Paper Funding Facility to support the flow of credit to households and businesses. The Primary Dealer Credit Facility to support the credit needs of American households and businesses, the Money Market Mutual Fund Liquidity Facility to broaden its program of support for the flow of credit to households and businesses, the Primary Market Corporate Credit Facility to support credit to employers through bond and loan issuances. Then you have the Secondary Market Corporate Credit Facility to support credit to employees by providing liquidity to the market for outstanding corporate bonds. Then you have the Term Asset-Backed Securities Loan Facility that started March 23rd, 2020, to support the flow of credit to customers and businesses. You have the Paycheck Protection Program Liquidity Facility. I'm sure a lot of you are used to this or have heard of it if you've been employed during the pandemic. And this is the Fed basically supplying liquidity to participating financial institutions through term financing backed by PPP loans to small businesses. Then you had central bank liquidity swaps, which the Bank of Canada, the Bank of England, the Bank of Japan, and the European Central Bank, the Federal Reserve, and the Swiss National Bank have taken coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap line arrangements. So all this shit went into it. And on top of that, you also had the Temporary Foreign and International Monetary Authorities, or FEMA, repo facility, which established a temporary repurchase agreement facility for foreign and international monetary authorities, the FEMA repo facility, to help support the smooth functioning of financial markets, including the U.S. Treasury market, and thus maintain the supply of credit to U.S. households and businesses. So they were doing foreign swaps to help maintain the supply of credit to your households and businesses. How about that? Also, this was from the Funding, Credit and Liquidity and Loan Facilities letter from Chair Powell to Secretary Mnuchin regarding emergency lending facilities, sent on November 20th, almost exactly a month after he stepped in to basically become the lender of last resort to everything. And link right here, I'll leave it in the description for you. So we've been through this section here so far. What happened next? Well, everything's shit, right? And then SLR started to pick it all up and allowed the banks to leverage everything, basically, freed up their liquidity, gave them a free pass for a whole year. This red line, between this red line is SLR. So between these two poles here, SLR is active. It's exact for 1 year, 331 to 331. It's basically a free pass. They bought up everything during this time. AMC and GME included in that at the tail end of it, right there around this time last year, actually. So, but so far, I've told you about where we've been from September 2019 up until basically March of 2020, which is when everything started to tank, and then SLR was enacted. Monetary policy helped with the leverage, gave banks a pass, gave them liquidity, freed up their liquidity, and they bought everything under the sun with it. You can verify this by looking at Fidelity, BlackRock, Vanguard, 13Fs. Go look at them around this time last year, between early February and mid-February. It's stacked with not 13Fs, 13Gs, 5% or more of a company. This is factual information. You can go look it up. Anyways, what's next? Next, of course, when SLR starts, they leverage the shit out of everything. Remember when Goldman Sachs made that rehypothecation facility over in Europe sometime in June or July? You know why they made that shit now, don't you? Because they needed to rehypothecate the shit they already had. And that was around here. We're still back here, but a lot of people forgot about the Goldman rehypothecation facility. Now you see that shit's relevant during a time of repo. Now what's next? The 3 red lines policy, and no one likes to talk about this, especially you, Mr. Metzler, because if you did, you'd realize, oh my gosh, this is actually a giant conspiracy between the United States and China, and it always has been. Because if we look at the simple document, what does it tell us? Real quickly, 5 reasons why they're doing it. Why now? This was written in January of 2021. 5 reasons. Number 1, to control house prices. Number 2, to manage land markets. Number 3, to ration credit to the real estate sector. Number 4, to lower cyclicality. Number 5, real estate developers are systematically important. Forced deleverage is exactly what this was. So you had the U.S. in a period of leverage. You had China in a period of deleverage. So that is how you see that split that occurred at the beginning of this video when I showed it to you. So what is coming up next? What's this blue dotted line? Guess what? That's Archegos collapsing. That collapsed 4 days before SLR was expired. That's right. March 26, 2021, 10 months ago, they were defunct. Because, likely, the 3 red lines policy. Nothing to do with AMC, nothing to do with GME. They were buying up everything because they had to leverage themselves because they knew about the Chinese policy before it happened. You know how they knew about it? Because guess what? The crux of this whole video and the ironic thing about all of this is that they spun off Chinese stocks illegally and then shorted them to prevent being margin called. That is exactly why everyone is in GameStop, because GameStop was getting shorted to bankruptcy, but now they've sat here and they've done the same thing on the other side of the world to Chinese ADRs. On March 26th, 2021, GoTo and many other stocks, 41%. It took a 41% hit because they spun it off illegally, because they knew they could get away with it, because the Chinese policy was still active. But then what happened? And by the way, GoTo is not the only example. There's many, many others. EDU lost 11% that day. There's a lot. They would have not survived had it not been for this, and that is illegal. There's lawsuits all over the place, and there's also a narrative to avoid China. Now it's starting to make sense, hopefully. So where are we now? 3 red line starts. More leverage, of course, from the United States. Less leverage from China. They actually start to deleverage. And then U.S. comes up on SLR expiry. Then what happens? That's right. The freaking repo goes up, doesn't it? You know why? There's nothing else to hold it down. There's no other policy. It's done. That's why they stocked up on all those assets. They needed collateral before this. Giant share lending operation has been taking place at historic levels. Not even close. You can't even say it's relevant. This is unprecedented. Not even close. Not even close. So, where are we now? 3 red lines policy just ended. That was the repo market. That's where we still are. That's got to come down. What must come down, I believe, must come up, right? And vice versa. If you look at these stocks, I mean, they're down 80, 70, 90%, and no one's looking. And I've been trying to tell you over and over again, and this backs it up. So here's my stamp of approval right here.